my first question to you is, what incentive might the U.S. have to adopt Bitcoin?
I think when you look at the incentive, it's a little hard to see at first glance because there's a huge incentive for the existing system that they've got. But when you think about how decentralized Bitcoin is and the implications of not being able to shut it down, the sound monetary policy that's associated with it, you can either cancel yourself out of that, or you can participate in it as early as possible in order to reap the benefits of what that means. And I think when you just look across all the other alternatives that are out there and how when I look at Bitcoin, it's just got so much decentralization to it through the full node network. And then you can get into the proof of stake versus proof of work piece. And as far as I'm concerned, the proof of stake is just more of the same, right? Yeah. Right? It's just, you look at the proof of work, you look at all the full nodes, you look at the Lightning Network that's happening, immediate clearance, any transaction size, and I'm telling I'm looking at that from my own vantage point. I'm saying, you're not shutting that thing down. That's true decentralization with a monetary policy that's going to be predictable into the future. And if you don't want to participate in that, you're canceling yourself. So I think that's the real key thing to kind of focus in on.
You've been talking a lot about the prospect of yield curve control, whether they're doing it or not.
Yeah.
How does Bitcoin fix this?
So for me, the thing that, there's a lot of really interesting things that are happening with it, but the reason I was so attracted to Bitcoin early on is because my opinion is the cost of capital is completely broke. If you're stepping into the bond market, printing a bunch of fiat, and then just buying the fixed income bonds, pushing the yields lower, pushing the prices higher, and then the cost of capital for equities and everything else is constructed as a premium on top of that, that's a recipe for disaster, because you're flirting with, are we dealing with free and open markets at that point, when you're adjusting that cost of capital lower, pushing the prices of everything, real estate, equities, you name it, is going higher and higher and higher. That's the concern. So it's exciting for me when I see the dollar via stablecoin kicking off 10% interest, and then I'm looking at the interest that you can go out and get in the regular economy through the traditional banking system, and it's 1.5% or 2% and going lower, trending lower for 30+ years, okay? For me, real fast, I'm saying, is that the real interest rate? And if it is, and that's the real cost of capital, and it's double digits, and I'm comparing it to this thing over here, is everything on the planet mispriced? Mm-hmm. And for me, I think it is, right?
Since this is a macro discussion, I want to open it up a little bit more globally. So, Russia just came out stating that they are removing US dollar assets from their national wealth fund. China is trading with Russia at 1/3 of what they were a few years ago in US dollars. Preston, talk to us about the game theory at play here, getting away from the US dollars.
At the end of the day, I think the thing that a lot of people, that especially they get polarized in the politics side, Democrat, Republican, whatever, and not just in the US, what they're clinging to is something that they think is the solution or the answer. But when you look at what's happening, the social unrest that we're seeing, this is a global thing. This has happened all over the globe. The reason why, you go back to Bretton Woods, we had a policy that everything was pegged to gold. All the other currencies in the world were pegged to the dollar, okay? If you adjust the money multiplier for 30, 40 years and you get yourself to 1971, and all of a sudden you can't make good on the deposits of gold because you've been adjusting the money multiplier throughout that period of time, you have to come off of it. If the US comes off of it, the entire globe, all fiat currencies, they all turn into fiat currencies at that point, but everybody's in the same boat globally, right? So now they're able to adjust the interest rates for the next, from 1971, 1980, you have interest rates peak, but they're able to adjust that and control it for 40 years, and here we are, interest rates pegged at 0% across the globe, not just here in the US, across the globe. You look at the at the central bank balance sheet, not just in the U.S., but collectively, and you look at how the printing is taking place and how it's growing, it's coordinated, right? And they're doing this to try to prevent social unrest, right? So I'm not going to bash a central banker. I'm not going to bash anybody. I think what we're doing is we're looking at a history of 80+ years of a giant credit cycle that's now down at 0%, and everybody's looking for the solution because you just can't take it into negative interest rates. We understand what happens, right? We understand that if we just keep doing QE and bidding bonds to the moon, that people that work middle class, lower class job, right, they're getting cut out of that. They're not seeing that. It's not trickling down. It's just getting bid into asset prices. So now we got to go to UBI, right? Universal basic income. Well, you start doing universal basic income, now all of a sudden you're having trouble getting people to show up for work, right? All of these things are interconnected. All of these things are a global issue that has to be solved through, in my opinion, sound money. You have to have sound money. You have to allow the cost of capital to be a free and open market so that it can naturally work itself out as to what something should cost. We are allocating capital across the board to things that don't make sense because of where the money's being, the pockets that it's being stuffed into. When you have a free and open market, a real one, that goes away and it solves itself naturally. So whenever I look at why I'm so excited about Bitcoin, that's the reason. It brings back free and open markets. It takes the social unrest out of it naturally, right? Focus on that is what I think the solution is.
And you can start value investing again.
Amen. And so, like, when you look at value investing, it's all about, hey, what are those free cash flows? How can I use a discount cash flow model to figure out what the real value of something is? But if you're changing those units that all of this is being measured in, you get this really unique situation where it's the person who has first access to the capital that's being printed and shoved into the hands of the lucky few. And Bitcoin provides this amazing, amazing opportunity to take that entire broken incentive structure and literally just flip it on its head.
Trey,
What
can
an
I
exciting
comment
time
on
to be
that?
alive.
I just have one more question for Preston, which is, did you jump out of your seat when Ray Dalio said he'd rather own Bitcoin than a U.S. bond?
Yeah, that was a really exciting moment for me personally because I think for a lot of people that the argument, at least for this past year, has been gold versus Bitcoin. I've been looking at it and saying, I think gold's the tip of the iceberg here. I think the bigger piece is what it can potentially do to the fixed income market. And so to hear Ray come out and say that for me was really exciting. I was like, this guy gets it. You saw the people on CNBC kind of scratching their heads, saying, why is he saying that? But I think for anybody who truly understands the implications that it brings, that's kind of like the ultimate road of where this is leading. Now, the speed at which it gets there, we don't know, but that was a really exciting moment for me. And then hearing Stan on CNBC a couple days or week earlier saying about the dollar losing its reserve status, and then Ray saying the same thing, I think tells people in the industry how big this is. This is huge.
Well,
This is massive.